Hey there, this is Alisado with Simple Option Strategies. Today I wanted to take you through one of my typical zero DTE trades, actually a trade that I did today. And the important thing is I wanted to share with you the process that I go through before I enter the trade, kind of what I look at, the setup, so you have a good idea of the kinds of things that will make you consistent if you do this over and over again. And so let's go through this. And this is all part of my trade plan, by the way. Okay, so this is a review of the prior day's session and the overnight session. I look at that every single day that I'm going to be trading this trade, the zero DTE, SPX zero DTE trade. And so what I had from the previous day, right, we went down quite a bit because of the impeachment news that came out. The market took a down day. And in the overnight session, basically what happened is that we went up and then we went down, okay? And so what I wanted to show here is what I look at in terms of support and resistance the day before. And this is what I identified, okay? I identified this area of resistance here, and this is about the 2980 area. We had gone down to this area a couple times and finally broke through it. And now, once we break through it, it becomes, what was support is now resistance. So I identified that area. I also identified the lower area, which is the support area. This is the area that the market tried to get through a couple of times, and it's about the 2958 area. So it's really the 2950-ish area of support that was resistance for a long time until we broke through it. And now, now basically it's support. And so you can see here that it did hit a couple times the support area, and then very early in the morning, right after 5 a.m., it actually breached it and then went back through it. Okay, so I consider that a support hold. And so these are the things that I note prior to the trading day. So I have that understanding of what levels that I need to put on in order to be safe in this trade. So let's go through the actual trade here. Now I expanded the chart a little bit so you can see it better. What I did before I actually started my day, very aware of the news events that could occur, right? One of them was the transcript, the Ukrainian conversation that the president had, for which, they're looking at impeaching. Depending on what was in that transcript meant, what could potentially happen in the market. And so if it was really bad, the market would go down. If it was good, the market would potentially go up. And so the news came out. I didn't have any idea what time the news was going to come out. I really wasn't planning to trade. Until that transcript came out. Since the market was already kind of in a downtrend, I noticed when the market opened that we started going down. I figured, okay, we'd have a chance because it opened around the 2970 area. So we'd have a chance of it going down possibly to that 2950 area. So I tried to put it in order right at 940, which is typically the time that I start a trade. And I tried to open that trade at 2990, 2995 strikes, a credit spread at 45. Well, I wasn't able to get it. It just kind of ran away from me, and I tried to change the order to 40, but it just went too fast. And so I just passed on the trade. And then around 10 a.m., transcript came out, and I saw the market just tumble down to the 2953 area and let the market digest this information and see where we're going to end up. You don't want to place a trade on a move immediately after the news comes out. You want to give it time to digest, let the algos go through what they're going to go through. Once I saw the quick down move and then a nice move up into this area here, I thought, okay, now we're starting to look good. So we started forming a base here, and it's kind of a cup with a handle here. It's very bullish. And right when we started going back up, I like the base that we formed. We didn't go back down and touch this news event area, but we stayed around this area. I went ahead and put on a trade for 2940, 2935. Now you can see the numbers that I'm using here. This is the short leg. The 2940 is the short leg. The low was 2953. And I knew that support was around 2958. And so I felt very comfortable putting on this trade, having it at 2940. I got a nice premium because the volatility was still high. It was over 17 at that time. And I knew that I would get a good premium, good distance from the market, and a potentially up move, which meant that I would put on the trade at higher volatility and allow the volatility to go down as the market went up. So we'd have that volatility working in our favor. So we'd have both market direction and volatility working in our favor for this trade. And so I put on the trade. You can see here the market went up favorably, Volatility started going down. It stayed around 45 for a little while. It went down to 30 in this area, just shot up. Now, if you recall, where was my resistance area? Well, I had noted it right here. So we were bouncing around, and I said, man, I'm gonna see if I can close this trade out at 5 cents. Hardly ever be able to do that just because it takes so long to get that premium down to that level. And even when it's at that level, it's hard to get a fill. The liquidity is gone, and people just don't buy your position out. I guess they'd rather hold it and see what happens. But in any case, I put in 5 cents, and I waited and I waited and I waited, and finally I got the fill at 12.44, not at 5 cents, at 10 cents. I just got tired of waiting because I've been through this before. It actually takes around 2 to 3 hours from the time that you put in, from the time that the midpoint is at 10 cents to go down to 5 cents. It's not worth it. And I just wanted to test it today to see what would happen. And you can even see, even when we went to this area of resistance up 29.80, I saw a midpoint of 0.03 cents and still did not get filled. This is a good pointer for you to say it's not worth letting it go to expiration, and it's not worth waiting the whole day to get a nickel out of it. So it was a great trade, made $350 off of it, very happy with it. And actually this was the 9th consecutive win that I've had this month. Don't think that I've had that many wins in a row. But in any case, this is what I do 3 times a week. It worked out. One more thing I wanted to share with you. Remember that point of resistance that I was talking about? Some guys had call credit spreads, and I knew with the news out already and the market consolidating in this higher area here, typically what happens is it'll take it out. When you have a position on, and I'm telling the guys in the room, and we're consolidating at this level over and over again, eventually it's going to break, and it broke, and it went way up. It went up 29.90 area. And if you would have had a position, a call credit spread, which some of the guys did, the best thing to do is to get out. So hopefully this was of value to you. Please subscribe. Every time I put out a video, you'll be notified and you'll get it. Hopefully the more of these you see, the better you'll learn how to trade this trade. I've been doing it for a year and a half. It's a fabulous trade. As long as you stick to your rules and manage it correctly, you'll make money on this trade every time. All right, see you the next time. Thanks.